Welcome to the FinTech Friday show with me, Roy.
We're not.
Lots of earnings this week. I love earnings season.
Yeah, it's a packed week. It's going to be packed next week as well. But we should have, 3 more weeks of this, and then it should start to slow down.
Yeah, small caps next week, so it's going to get really crazy out there.
Yeah. That'll get busy, but overall, it's showing that the live stream is lagging from my side. Is anyone getting any lag here, or is everyone good?
Looks good.
Okay.
That's because you were late.
My bad. We were waiting on you.
Bullshit.
No. You were on time. You're on time. But we have. It's actually funny that SoFi, Robinhood, Kathy Wood, dilution.
Is Kathy Wood still news at this point?
Yeah. She's acquiring mass amount of shares. I like the news.
I mean, yeah. Well, it's only a matter of time before she sells it. Like, we've been here before.
Yes. Yeah. You know what's so funny is I'm watching what she's doing with Coinbase right now, and like she sold it yesterday and bought it today. Like, it's just, I don't know. For an ETF, it's definitely interesting.
It's good that they look out 5 years.
Yeah.
We can talk about that at some point. There's 0% chance that their expectations for Tesla come true for 2026.
Agreed.
When have
I
they
should
ever?
say 1% because nothing's 0%, but there's a 1% chance.
But do we want to get started first on SoFi? Obviously, we have earnings talk to go through. We have dilution talk to go through. I think that could fill quite a large space here. So,
And we have a little theory about dilution.
I mean, we can go right into it.
We got a little theory about it.
Go ahead.
No, you go ahead.
Well, I don't know if we.
I'm probably more confident.
Okay. Makes for a good podcast. This is great audio listen. But anyway, SoFi showed off their earnings. I don't think, like, Roy, you weren't in the call with us. You were covering PayPal there, but I'm sure you had a side eye on what was being posted. You must have been jaw on the floor. I mean, your financial services revenue was too bearish, and you were by far the most bullish out of any of us.
Yeah.
So
yeah, I was actually a little surprised that my overall expectations didn't get beat based on what they posted. But I mean, like, it was close and ridiculous quarter. You can always nitpick, but I'm not going to because it's their strongest quarter in existence, frankly. Just getting stronger on every single aspect of the business. Anything that is a concern is like so minimal and so nitpicky that you have to almost go to the SEC filing just to find it. So amazing. And you know, one of those things that I'm actually thankful that I didn't see this at all. You know, I mentioned just so people are aware, mostly so they don't expect like 40% year-over-year growth for like multiple quarters in a row, that it did come against a weaker comp, but nobody's talking about that. And they shouldn't be, because when you grow at mid-40s% revenue growth, it doesn't matter what asterisks or whatever you want to ascribe there. It gets a lot of attention on the stock. And uncharacteristically, we also saw a pop in the stock price that lasted until the leadership of SoFi decided to rug pull it. So,
well, I don't know if that's true. Like, it was coming down before they announced it after hours.
Yeah.
But do you think that
was I the closest in our price predictions? Or did somebody have 21?
Your 19 was, I think.
1950, yeah.
Yeah.
Wow, that's interesting, guys. Wow.
Management and macro saved you. And that's the thing about the stock prices. Like, it could be the best or worst results in the world, and you don't know what's going to drive the rest of the market. So, and a lot did beyond what SoFi did.
Yeah,
honestly,
I can't believe you're taking a victory on that. That was all macro.
Macro
Literally
and
the
management.
day before it was
The fact that they issued more shares after the bell on earnings day was macro.
no, the stock price had nothing to do with that. So
it did.
look, this was earnings, pop, okay, came down, issued share buybacks. That's this line. Oh wait, that's this line here, and then this is after we knew dilution. It came all the way back. This is
and what
macro.
happened
This
today?
top here is all macro.
It's all macro. None of it is because of dilution.
Jeez.
This is the dilution right here.
Sorry. Price predictions are always a crapshoot. I'm just saying, like,
Not
guys
only
were
was the
all-
dilution here, but we knew that it was already completed. That's why it started running again, because they knew that the 8% part was over.
What are the yellow lines on your chart?
Averages, I think, average volumes.
You have the weirdest chart layout, dude.
Yeah, that is really weird.
I promise you I didn't even change a thing. But I know a little bit of his opinion.
The possible options that you could use. We just want to improve our cash position and just be in a better spot. And they had nothing in mind. Like, I don't know if I should be looking out for an acquisition or not. But then again, like, why would they? Like, they had sufficient cash.
I don't know what's
understand
going on with the
why
live
they-
streams right now. I apologize, but everyone is supposedly experiencing lag. StreamYard is not telling me there's any problems, and YouTube is saying excellent connection. So I don't know why we're dropping here.
You want to just go to Zoom?
No, we can't switch out while we're live.
We could just start a new feed.
Hey, somebody said my stream is good. Everybody switch to my stream.
That's interesting.
That's not good.
America, something like that. I don't know.
Okay. Voice is break. Yeah, I don't know.
Yeah, a bunch of people say it's
Canadian tariff effect.
Yeah. If it's not working for you guys, if you can see me, jump over to mine. I think it's working for all of us. But go back. I'm not trying to take people away permanently from other streams. I'm just saying if you're having issues, try that for a few minutes.
I don't get why that would be the case.
Yeah, that's really weird.
They're saying Tevis' stream is good and Roy's stream is good.
Okay.
Is it maybe your connection, Tanner?
Well, I'm not lagging here, and YouTube says there's a good connection. I'm not having any frame rate drops, but I see it as well. It is lagging, but
You won't lag on StreamYard. Every time I streamed from Mexico, I could hear you guys in real time, but my voice always came like 30 seconds delayed to you guys. So you'll hear us like in real time. It's just when it goes over to the YouTube side, it'll lag.
Yeah, a lot of people are saying it's back up. So yeah, if it's not working on one, just switch to another for a little bit. And yeah, not trying to steal anybody, but got to keep the stream going.
Yeah.
It's really weird though.
yeah.
So Tevis, you were saying as far as
I just want to see what they do with the actual money, right? And I hope that a press release drops at some point where they either announce an acquisition or they announce something. We need this money to pay off some outstanding debt, or like what they did with the cap call transaction, to say, okay, this is how this is fundamentally going to help the business going forward. Then you can make a case against that dilution, or potential dilution, whatever you want to call it, raising the funds and then being like, here's really give me that much clarity.
That's acquisitions. So then rather than raise each time, they would just raise all at once. That doesn't seem to be to tighten that balance sheet, help, with their lending. I think it's a big mistake because basically you're diluting all of us shareholders by 8%. And yes, there's an incremental advantage of that. And then based on the actual earnings that you have from that, you can use that money as well in the future. So it does accelerate your business slightly, but the marginal acceleration of the business, in my mind, is not worth an 8% dilution. Now, if they'd sold this and they're like, okay, in part, we're going to use it for balance sheet stuff, in part acquisitions, in part, we're going to do more marketing, which by the way, they have been ramping up. Great. That's awesome. I'm okay with that. I just don't understand the need to raise it like right then at that moment. And the biggest frustration for me is this: when I'm I'm in this long term, short term price action is just fun. So I don't have like short dated calls or anything that like the quickest thing something actually expires for me for SoFi is a year and a half from now. But in essence, what they did is just really halt the market momentum, and they took the eyes off of the prize, which was how great and ridiculously so these earnings were. And they took the focus immediately. They didn't even give it a full day. They said, okay, now look at the dilution, guys. And that became the shift and the focus of every single shareholder, of every single hedge fund, every single analyst as well. I guess not every single, there's a few exceptions, and all of the headlines. Instead of SoFi dominates, SoFi is growing at this ridiculous rate. Look at these audacious plans. Like, oh, they're diluting by a bunch. Huh. I think that's a mistake.
Yeah, I think Steve is kind of on the page that I'm on, that I think this actually adds more for them. And if a company can dilute shares by 8% or take away ownership by 8% and then accelerate growth by 15% or something, it might actually work out favorably, even if you own less of the company. Like, if they cut your ownership in half, but then 4x the growth, you have still doubled your total equity. So that's what I think is happening here. They came from a complete position of strength, and people think that we're somehow going to lose. Like this is bad for the business. Tevis, what did you think about this? Because I haven't really heard anything from you just yet.
Yeah, I mean, I agree with what somebody said in the chat. Like, how they rolled this out is not the best way to roll it out. I thought Noto would start responding to a couple of comments after he retweeted that thread saying, okay, well, now we can finally talk about it because the deal is closed on Thursday. And yeah, I think there's a lot of speculation going around as to what the rationale was behind it. And the fact that there's a lot of speculation just means that there wasn't a lot of clarity around why this was needed, and the timing around it, right? I think a lot of people got irritated after his commentary on what it was, CNBC or Bloomberg or whatever it was, where he's like, hey, like, we'll assess at that. And like, it was already in progress. It was going to drop in a couple of hours, right? So
yeah, but what's he supposed to do though? Is he
I think he got
What?
blindsided by that question. I absolutely think somebody in the news cast or at CNBC or whatever got a leak and wanted to ask him straight up. I get it. I just I'm just saying, like, hey, I'm putting two and two together, and I'm articulating why people in the community were upset. I'm not necessarily saying, oh, he should have pulled a rabbit out of his hat when he was blindsided with a question. I'm just saying that the timing of it and the lack of concrete rationale as to why they would do it right now and why that amount and what they intend to use the funds for. I think all of those things put together made it way more confusing than it should have been.
See, to me, I think I understand it. And I think it's the same conspiracy that Steve has. But I'll let Steve say his piece.
Normally, I'm the one that would be complaining about something like this because I hate dilution. At the same time, I think Noto and his team have earned the right to dilute shareholders if they feel there's a good use for the capital. When we look at what they've done in the past, I think the Technesis acquisition was a phenomenal use of dilution rather than tapping the debt markets and paying juice on it. It's just my own opinion. For certain types of things, I would rather give up a little bit of ownership than add interest expenses and compress earnings in that fashion. Obviously, you're going to compress earnings when you issue shares, but you can always buy those back at a certain point. interest expenses are going to be on that debt until you buy it back. I have a feeling that it's twofold. And first one could be some type of acquisition. Obviously, with the jobs report, they didn't know the jobs report was going to do this, but if you look at what the Fed projections are now, we went from 60% to 91% in a matter of 5 minutes for a September rate cut. And the Fed is way too tight. I think we can all agree on that. When the Fed gets down to under 400 bips, the housing market's going to start to come back. So they may do something with housing, expecting that to really kick up, because refinances and new loans has been very limited over the past couple of years, ever since the Fed started raising. They could be doing some type of bolt-on acquisition with crypto or something else, because they are going to get back into that. But they also have high-yielding debt that they may eliminate, which may cancel this out. There's a lot of different things, but I can't stress enough, this is not a management team that I'm necessarily worried about putting capital on the balance sheet and then utilizing it, because not many management teams could have gotten us out of the pandemic with student loan moratorium and everything that I could go into about that. I think that they're going to do the right thing. And let's not forget, they raised guidance in the morning. Nobody is going to convince me that this was just, oh, stocks up 12%, let's issue more shares. This was obviously talked about previously going into earnings. They decided to do it, and I will not believe that they put increased guidance on the deck and discussed it, and then did something 5 hours later that is going to eliminate them beating in Q3 or for fiscal year 25. I refuse to believe that. We know that he has a history of beating and raising. And what if this goes the opposite way and this creates a drastic beat next quarter? I mean, I think it's got a good chance of that. And let's not forget his RSUs. Do we really think that he's going to screw up his RSUs for next year? I don't.
I think you're exactly right. I think that they put it out, and the reason why they didn't do dilution during the call is because then it had to be factored into guidance. But what I think that they did was separate it, call, and then dilution, because they know that they're going to crush earnings. And they set up to sandbag once again. So they rate. Sorry.
Wouldn't it already be factored into guidance?
No.
How so? Because like when they provided guidance in the morning, they already knew they were doing this.
Yeah, they knew that they were doing it, but they didn't have to tell the market that they were doing it.
Yeah, I agree. It wasn't done technically, so they would not put it in the guidance. It would actually been inappropriate if they did.
Right. So I think that they did this on purpose to destroy guidance. My new estimate for 2025.
Before you say it, when Tanner told me his new estimate, I almost freaking fell over.
Is it 45 and 25? Can we make the meme real?
No. But I do think that we get 38 cents.
That's close enough.
Yeah.
And that was after Tanner crunching numbers. He didn't just pull that out of a hat.
A little bit of crunching. And it's decently into 38. It's like almost 39. So I do think we could get there, especially with continued beats on net income, and then including this just on debt pay down alone, which would be the least efficient use of this capital, okay, would immediately add like $39 million to the rest of the year if you take into account their 5 to 6% cost of debts for the next 5 months.
Sorry, let me ask a stupid question. Wouldn't this bring EPS down though? Like if they increase the shares outstanding? So
Yeah.
how is that like?
So I'll pull up my spreadsheet.
Like, are you just saying it's bullish depending on what they do with the money?
Yeah.
No, it's bullish regardless, but it's incremental. It's not. Yeah.
Here, are you showing what you want to show, Steve?
Yeah, just before you do that, I just want to show one chart. So, and here's the other reason why I'm really bullish about it. I'm sure we'll talk about this later, but when you look at financial services on net revenue and contribution profit right now, and if you see lending on both metrics, and depending on how they use this capital, it could be even more accretive for financial service. I'm really excited as banking and wealth management.
Yeah, but Steve, there's an argument to be made that since they're having some dilutive event right now, EPS is going to be lower than it would have been, in the morning. And whatever they spend that cash on isn't going to have into, let's say, 26 or
Yeah. But have you looked at the income statement recently? I mean, obviously you did, but
Tuesday.
1.1 billion in total interest expenses in the trailing 12. What if they're using the lion's share of this capital to eliminate the higher yielding interest expenses? And
That
then
would
the
be accretive
combination
the
of
next
that
day.
plus the growth on the top end
Right.
nullifies everything and actually makes the whole deal accretive, and it provides EPS growth.
Is that where you're getting the 38 cents from, Tanner? Assuming they use it in that way?
Yeah. So I'm not assuming that they do business banking or anything, which I actually think would be more bullish, because I think that there's opportunities for them to crunch out an even larger win. But all I did was, where's this? I just looked at how much they raised, how many shares that they actually added here. The max amount, which I think is what's going to be what happens, which leads us to a new share count, 7% outstanding dilution or ownership dilution. But if we talk about debt paydown, which is 0% execution. So if they do business banking, if they acquire a crypto company, if they do anything along those lines in terms of even loan growth, has execution risk. Debt paydown is not. You're going to the bank and you're saying, hey, I'm returning your money. So the possible left for the 5 months out, so how much left that we actually have is about 39 million. And if we end up looking, so if we just look at net income and shares outstanding, then yes, it is dilutive. But they've already said that it's neutral. However, I don't believe them. I actually think it leads us to 32 cents based on a little bit of increased debt paydown. And then if they beat, like they do every single quarter, by roughly $32.8 million of net income, I actually think that brings us to 38 cents.
Why wouldn't they do another cap call transaction with this?
Not sure. Not sure.
Is there an obvious reason, or like, is that because if they believe that, okay, we're going to pay down the debt, it's going to be accretive to EPS, and we're going to be able to completely demolish our numbers, then it would make sense to do a cap call transaction and remove the possible downside of dilution in the first place, like they did with the last time.
Yeah, stock's a little bit more expensive.
Yeah, my issue again is the timing, taking the focus off of what they should have just let stand for at least a week, and they didn't have to raise right then. Like if it was that debt was expiring fairly soon, that's a senior convertible situation, that makes sense. Or if it was like, hey, there's this acquisition, we need to strike now, absolutely makes sense. This, it's like, yeah, it's a nice thing, and so like it is accretive slightly. I agree, it's not going to be just flat neutral. But it sounds like that's what it's for right there. It's just like an incremental add. They could have waited. They could have got. I think that it's very unlikely that SoFi is trading at a lower level before this. After this doesn't matter, in a year. So why not, wait? It's not all about EPS too. I know it does raise it just slightly. But yeah, if it was for actually something that accelerated their business, so it's business banking or it's an acquisition that really helped drive the crypto product that they're wanting to drive, great, that would be awesome, or at least part of it was. But instead, it was this. So I'm not saying it's bad. I'm not like this is negative or anything like that. It's slightly positive. I just don't want to be diluted by 8% or 7% for something that's slightly positive. That the acceleration as far as a business, it doesn't do anything for. So.
Yeah, but I don't get the point of not doing it.
So if it's so good of doing it, then why don't they just do it more? They have up to 3 billion shares total that they can issue. Why not just ramp that up to like 90%?
Yeah, but they might.
They want the stock to go higher before they do that, so it's less dilution overall.
Yeah. Yeah. They just do it in chunks.
Which is why they should have let this go up higher.
Yeah, but then
think
Friday comes and then we get a bad macro. Like, I just don't think that they are like,
That's exactly the point of doing it on earnings day, if you think about it.
yeah,
Because
exactly.
we all know what the trend has been: beat, raise, up, fall.
Yeah, and
You know?
this guaranteed that as a result of it. Like this, the earnings were good enough. They should have let that be digested by the market and analysts and not take the focus off of that. I mean, you can never guarantee what would have happened, but it's very likely that SoFi would be trading at a pretty much a good bit higher price than it is right now.
Okay, but hold on a second. It's still at $21.
Yeah,
Does it really matter?
yeah.
No, it
After
doesn't.
diluting 8%. So we're
Absolutely
actually
does.
higher.
No, it
Steve,
doesn't.
yes, okay. We're
Not in
looking
the
at these
slightest.
targets next year of them getting to $35 or $45. We're all in agreement that 35 is very likely and 45s are in play. This is before this, just on the strength of this earnings, what they're executing between here and there. So if instead of diluting at around $21, that they waited until 35, they could raise the same amount of capital, do the same amount of acceleration, and it dilutes by a far less amount. So I don't know. The
After
timing doesn't make
dilution.
sense. It wasn't like that they had to do it right then. So
But
After
Rory-
dilution, it is still trading at the highest level since 2021.
yes, but where would it be if they hadn't done this?
But
It
they
could have
have,
still gone down just like it does every quarter.
they have no guarantee that the stock, like when the stock will be at $35. Like they were executing for the past 4 years and the stock refused to get over $10 a share. And so like it's opportunistic because they can't see the future. They can't say like, oh, on December 31st, the stock's gonna be $35. Let's just do it then, guys.
Well,
Being
if
over
that's the
20
case,
is a
then they
great
shouldn't do
time
half
to do it.
measures and they should dilute to 90% of their maximum threshold at that same strike. Just do all of it. Boom.
Yeah, but you don't even believe in that. You know that that's not
No,
going to be the
They're
case.
foolish. What they did was foolish. Whether it was large or small, the bigger it is, the more foolish it is. Now, I'm not saying
But do
foolish.
you
as a
see the
negative.
implications of what you're saying there? Like you're talking about like insanely high-ranking investment bankers that have made a foolish play while their stock is the highest it's been in 4 years on paying down highly expensive debt.
It's because they were just focused on the numbers, not the narrative. And you need to let
Because the narrative's
market
not
and people
been-
have a tiny bit of time to digest the earnings and not take the focus off of your best earnings in your entire company's history by something that is stupid. Like, I'm not saying it's stupid as in the business sense or the number sense. Those all make sense. But the timing of it, don't do that. It's dumb.
Roy, how many people are actually looking at that? Think about it. Noto
Quite a
didn't
few.
even discuss it on any of the interviews that he did after earnings. Those interviews are still going to be watched a week from now, 2 weeks from now by people. This doesn't change the investment narrative at all.
It does.
So are you
That's
selling
a lot
that?
of people.
Are you now the
A
bear?
lot of people told me it did. A lot of people were saying, hey, I was looking at SoFi.
Are you
I don't know
selling?
why they're diluting. I don't like dilution. I'm out of here.
Are you selling?
Me? I actually took some off. Yeah. I sold some.
Really?
Yeah.
Interesting.
I think if you were to look at what the market did, that they had no problem with this at all. We knew about it here. The whole market knew. And then we climbed all the way back up. This is after knowing about the dilution.
And the only reason we're down is because of the jobs report and the market took a dump today.
They swallowed that earning. Like they swallowed the dilution. They were happy with it. They understood what it was for.
And it started running right again.
If they do use the money to pay down debt, would they issue a press release or a statement, or will we just wait until next ER to find out?
Probably next ER. But
Yeah.
like,
They don't issue much news during the quarter.
yeah.
Hmm.
But honestly, what I think it'll be for is all three. I think they will partially take off their debt. They'll juice their loan book and they'll buy a decent crypto business.
I don't think they're doing an acquisition based on that press statement. I thought so beforehand, but yeah, when they had said that, it basically it sounded very unlikely. If it does happen, it's going to be later. Now they should, if there's something out there that will accelerate their business. And at that point, like depending on what it is, what they get it for, how it integrates, I might go from on this. Honestly, I'm neutral on this. I think it's stupid timing, but it's okay. It's not bad. If they use it for an acquisition that fuels their business, like awesome. That's great.
Can we discuss the most bullish thing from the earnings call?
Well, hold on. I want to stick on this dilution thing for a second.
Before you do, real quick, Tanner, this is exactly what I'm talking about. Instead of us talking about the impeccable, ridiculous earnings, we've spent this episode to date focused on dilution, and it wasn't me bringing it up.
Well, I think it's because it's a more confusing or more complex deal than what investors are used to. So they want clarity on what is going on.
It's a piece of news that needs the most clarity this week.
Yeah, but
which is problematic for this week. Do it next week.
Yeah, but that part doesn't matter. Find me the
was around 24, 25. It was a great time to do it.
Well, so
find me the Wall Street analyst report that is talking poorly about this dilution. They're not at all. They're all bumping the stock price. They're all very happy because this is what a financial institution does. They're taking advantage of a high stock price, and whenever it becomes more accretive to pay down debts, why would they not?
And again, on the other side, if that's the case, then why don't they just dilute up to the max or close to the max?
Yeah, but I think that there will be more times that they end up doing this if they can find ways to pay off debts and be opportunistic. But like that's the balancing game.
And let's not forget, there are other companies that dilute the hell out of shareholders, i.e. Tesla, i.e. Palantir, and it does not matter for the share price one bit.
Dude, just do a freaking capped call transaction or announce some buybacks at a later date, or have some more clarity around addressing the dilution. Like the last time they did this with a cap call transaction, everybody knew that there was going to be dilution, but after they explained it, it made sense. And I think it all comes back to their lack of transparency around how they're going to use the funds. Aside from that single post where they mentioned hey, here's 5 ways that we can use it, right? To Roy's point, the only reason Roy doesn't like it, and the reason why a lot of people their stock sold off, was because it was a dilutive event, right? Well, everybody can agree that paying down the debt is a positive thing that they should do as a company because it will pay dividends down the line.
And the amount of people that have said that it's risky to do that, there's zero execution risk to paying down debt.
Absolutely. So address the dilution point and what you're going to do about it, and then address what you're going to use the funds if it is in fact for this reason. And I think the reaction will be much better than just ambiguity.
Yeah, but I don't think that they know that answer. I think they do think that they have flexibility here, and I don't think that they plan to use 100.
So if
I think they gave you the answer that they really are thinking is that they have multiple options and they are going to use it at their discretion.
Well, so that's been a little bit troubling, Tanner, because it's how did they settle on that amount in the first place if they didn't have a home for that cash that they wanted to raise?
But just because we don't know doesn't mean that they didn't have an answer. That's our ignorance. These are you point me to the direction of the time that Anthony Noto has done it wrong, and then I'll say, you know what, maybe there's time that maybe this could have gone wrong.
No, totally.
But I'm going to agree with Tevis for a moment on this, and I do think that they should have done a town hall on their SoFi live stream, and if they don't have one, they should have set one up. And Noto should have came out after hours and discussed it, or should have came out the next day and discussed it and went in depth about their plans. As shareholders, we do have the right for that, and this is a communication blunder on one side. On the other side, this guy was a top investment banker at Goldman. He understands what he's doing, and unlike other people who are running companies, he actually has a huge background in this. And I got to trust with his background and what he did for so long that they ran the numbers and they feel that this is a great use of capital. And if it ends up becoming a split between paying down debt and making a bolt-on acquisition, let's remember we're getting the acquisition at no points on interest, which is huge. And at the end of the day, diluting shareholders does not impact the business operations. All it does is spread the earnings out across more shares. So if the revenue growth goes up and operational margins go up, it's not really going to matter.
Steve, look, I 1,000% agree with you, but the answer can't always be, oh, we have to blindly trust management.
I agree with you. Communication's been a big issue, and I've been the one harping on that the most about other things.
We, the four of us, over the past 4 years, have been the ones spouting, oh, we have to blindly trust management, guys, even though they don't communicate. But you know what? That only works for as long as management is making the right decisions and they're executing. If they were to make one wrong decision on those funds or something stupid, like it's such a thin veneer of, oh, like at least if you are ambiguous about it, you do need that baseline of communication, especially as you go into becoming a larger company. The bare minimum. There's been times where, like when they did the cap call transaction, I remember there was a lot of confusion. And Noto went on with the loan platform business, same thing. Here's a press release. There's like a fireside at all, right? I do trust that management is never let us astray thus far. I'm just saying.
I
agree with you.
They put out.
I've been going off on SoFi about communication more than anybody about different things.
You are limited. Noto is absolutely right that you have to wait until it's closed. That's actually genius. They probably got a source or a tip or something. And he didn't lie. He danced the line, but boy, that was the only thing that I fault with the communication. It was still way better. I don't think that if they do have an acquisition lined up, I hope so, as long as it's an acquisition that actually accelerates the underlying business. Otherwise, why do it? But if they do, they don't want to tip their hand here too much and just be like, oh, it's in this space about this market. Like, don't do that. You can't do that. But I don't know. Given the verbiage of what we've gotten, I would be surprised if there's anything. So I'm curious, Tanner, I know you're going to say something too, but would you be more or less excited about this if there was an acquisition as a result of this?
I think more excited if it's a small acquisition. I do not want another $1.5 billion acquisition. There's nothing that they could buy that I would get excited about. A $200 million, unless it was Lending Club.
Mm-hmm.
That's the only one.
What if they bought PayPal for $1.5 billion?
Come on now.
Oh, that'd be amazing. It would just never happen.
I'd be so mad and happy at the same time.
If they bought Lending Club, if they went out and bought Lending Club for $2 billion, something like that, I would be over the moon.
What's the market cap?
Less than $2 billion.
Oh wow.
They're like a $20+ billion company right now. 1.5 billion is small at these levels. Like not 2 years ago when they were $7 billion market cap, but
yeah. I apologize for the connection. Like honestly, what I'm thinking it is the YouTube, like Canadian YouTube, I think is honestly being attacked or something. Like because my connection to this StreamYard, which is my internet, is doing fine. All of you guys are like between me and the friends here are doing fine. In other streams, we're doing fine. It's not working on Tevis's either. So I'm just wondering like why ours isn't working, but Roy's is. I don't know. Either way, I think it's doing better now. But I really do think that this is like a YouTube DDoS type thing because I'm reading
the most bullish thing from earnings.
What?
Yeah, loan platform.
Go. Bullish thing from earnings, please.
Loan platform business. Go, Steve.
I thought he was going to talk about Cloudflare, but sorry.
Yeah.
Go ahead, Steve.
And the most important thing, deals to close that will start generating revenue.
Because they said it last quarter.
No,
people understand how in
2026 they're able to close enough deals where the reoccurring revenue platform can get tech to a similar place that financial services is at right now, and you now have 3.
Steve, come on, man, be real. 150 million next year. Who cares?
Now,
I have no idea how many.
Take a guess.
For Wells Fargo or somebody, that's going to be a huge contract and set the movement for other large and mid-sized financial institutions, which becomes large recurring revenue off of an asset that is allowing SoFi to deploy when they want, to build it how they want, and save them 60 to 70 million in annualized expenses. It's going to be great. And let's not forget, this can really change the narrative and give them a bigger multiple.
Well, that was the weirdest thing for me is it seemed like they spent attention before the earnings and during the earnings themselves, focusing on capital light. Actually, a number of analysts were mentioning this too, and that's the great thing about the loan platform business, right? Is that they're not going to be capital constrained. I mean, they could be for their own lending, but they're not really going to be capital constrained. They can always spin off more products, usually on the loan platform business in this environment. So them diluting, if this is used basically to fuel lending, it's like that's good. It's still accretive, but it's like it's weird that they would paint that picture and then shift away from it so quickly. So,
just 1 second, guys. I can absolutely do this. This will be perfectly recorded, and we can just upload it on the side as well for people that want to look back on this live stream. Because I apologize that it's lagging, but we will have the recording saved. I honestly don't think it's us though. There's like this. I'm all out of answers.
Leave Canada.
That's right.
Yep.
Tech platform, a complete juggernaut, and you're going to call years to come. Like, yes, it's less and less hasn't been a financial impact driver over the past like 3-4 years.
And it's something that they can do in tandem with everything else they're doing.
Sure, they closed 10 more deals. Let's say 20 more deals. And one of them is a top 3 bank. Like, what do you think that takes their revenue from the tech platform?
In all seriousness, if you look at Citigroup's income statement, their salaries and benefits are a separate line item than general admin expenses. And they spent almost $16 billion on that last year. These could be, depending on how big the bank is, hundreds of millions of dollars to $1 billion a year, with depending on how much they take. These could be huge, large-scale deals. And don't forget, these aren't going to be flat. They're going to be multi-year deals with annualized escalators. And per project fees for building out new stuff. This could be huge on top of everything else they do.
My point is, it's very quickly going to come to a point where financial services alone is more than lending.
It's going to be within 2 quarters earlier.
Right. And so, I think the tech platform is just going to be a smaller and a smaller and smaller part of the revenue mix.
But what if it's not? What if financial services keeps growing like this, but we get an S-curve in tech services the way that we did in financial services? Just think about what that does for the company. And think about from a narrative perspective, what it does when you have very large financial institutions running on SoFi's core banking platform.
Yeah, it's not a nothing, but yeah, I agree with Tevis. Like, it's a loan platform business. That's the most fascinating, quickest growing, unconstrained, so little downside side of the business where they can spin off products and it ramps up so quickly. That's what's going to drive the growth. That's what's going to drive the narrative too over the next couple of years. Now,
wait, how is
what
it
you're saying, Steve, can absolutely happen. I'm just not holding my breath, and that's a nice thing is we don't have to at this point, because the loan platform business has changed the trajectory of this company. So if, the AWS of FinTech works out and the tech platform does really well, that's awesome. But we don't really need it to have appreciable upside, which is a great thing. It's kind of like, and I'll turn it to you here in just a second. It's kind of like, with Palantir, if Apollo, really takes off and has some great quarters, that's nice. That's not in the thesis at all. That's just a gimme.
Roy, how is lending the quickest growing? Financial services is growing much quicker than lending.
Well, most of the loan platform business revenue is in financial services, though.
Most
of them broken out. Do we have to go through like this whole
financial
services is a separate thing? Lending has its own contribution profit and revenue.
Unless I'm mistaken,
you can go through the deck.
The revenue that goes to the loan platform business. They broke it out, I believe.
No, wait, hold on. I can clear this up. What is the question?
Loan platform business revenue falls under financial services. The originations fall under lending.
The servicing falls under lending. Yeah.
So what's the breakdown of that revenue by percent,
I
roughly?
have it. This is the breakdown of the revenue by group.
No, I mean like when they sell loans off the loan platform business, what?
It's whatever we made on financial services. It was like 3 something. 127 of that was loan platform business.
I mean, I'm not talking about originations. I'm talking about how they break out their net revenue. Financial services is growing much quicker than lending. And
Yes,
it looks like it's going to surpass within 2 quarters.
but lending means housed on their books. The loan platform business, which goes out to other institutions, is housed, or it's the line item is in financial services.
Right. I'm talking about the lending segment.
Yeah. Okay. Sorry. Honestly, I'm trying to fix this stream, and yeah.
Like the lending segment that they break out is not growing nearly as quick as financial services. It's in their numbers. Been tracking it since 2019.
Yes, but a lot of that is because the loan growth that they have is not housed on their own books anymore. They're doing it for other institutions now. So, although the loans and the underwriting and the customers that they find for loans is the fastest growing segment, it's not all housed in that line item. But if you go to their disaggregated revenue lines in their 10Qs, you can see the loan platform business and the referral lines, which all referral lines go into financial services.
How bullish are you on referrals, Tanner?
Huge.
Because I know that you got to be chomping at the bits because of how crazy originations were this quarter. And with the Fed cutting rates, this could go gangbusters. It really could. I
Bro,
was shocked at total originations.
It's insane. Like the amount that it sped up this quarter was nuts.
Yeah, I'll share the chart.
Um,
I was absolutely shocked at how much they did in originations. I mean, that green line is just parabolic. And when you get a couple of rate cuts in there, housing market gets unlocked, you get student loan refinancing. I think we're going to be in for a very good surprise in 2026.
yeah. Can we only have a little bit of time left. Can we please talk about Robinhood?
Yes. Can we do like Robinhood and then just a little bit tiny, like 1 minute PayPal,
Yeah.
1 minute Coinbase, and then I've got a topic for the after hours that I'd like 16 seconds to pitch after that. But we can start Robinhood if that's okay.
And there's no lag in the after hours because we record that and post that tomorrow. So
that's right. High quality content. It's the only thing that we do for members. If you guys do memberships at any of our channels, except for Steve, he doesn't count because he doesn't have a channel. Although we love Steve, he's the best. But subscribe at any of us, and you can't watch it live, but you'll usually see it the next day or two. Usually about 3 days after for me, because Tanner is not the one that's late in this equation. It's always me. And Stock Talk with Cody, thank you so much for that $10 donation. Debating selling a call at 75 to 80 on HIMS. Came to the right show, FinTech Friday. It usually you only want to sell covered calls on a strike that you're comfortable at selling. So if you're like, hey, I don't mind trimming at 75 to 80, why not sell a call there, bank some profit? Otherwise, I would be careful. It can blow past it.
So 2 things I'll say to Cody. I think if you want to get rid of your HIMS shares, then writing over earnings is definitely one way to do that because you'll capitalize on the premiums. And the second thing I'll say is both Roy and I are covering HIMS earnings live. So make sure to check that out after the market closes on Monday.
Robinhood. What did you guys think?
Well, real quick, Steve, are you a Robinhood shareholder? I know you had a short little silly Seeking Alpha. No, okay.
He's a Robinhood customer, which is even better.
I know, customer helping you guys out.
That's true.
Because look, before you get into your pitch, you guys know how much I always said I don't know why anybody uses Robinhood. I've said that for a long time.
He knows now.
Yeah.
I'm going to tell you, I may not like the platform, but I'm good with the prices. I mean, when you look at how much cheaper it was to buy Ethereum on Robinhood than Coinbase, night and day. Like, I am shocked, and I'll never use Coinbase again for anything except holding stuff. Robinhood has my business for crypto now.
Holding stuff. Got to get yourself a wallet, my man.
You think I don't have a freaking ledger?
Why would you hold stuff on chain?
Because my ledger's full and I bought some H bar. And
Oh, that's so good. My wallet is too full. First world problems, right?
I've never heard that ever.
I have too much cash.
listen, I didn't get the
300.
big one. You're probably talking about the big one. I got the
My
little
ledger
Nano
is
S.
full, dude. That's the funniest thing.
Oh, look, I got the Nano S. You can hold freaking 5 things on it.
Okay, so
Is that really true? You can only hold 5 tokens?
On the Nano S, yes, you can only hold 5 different currencies on it.
How many Bitcoin do you actually have that it's taking up all the storage in your wallet?
Oh,
No, you can only hold 5 currencies on
what
the
a
Nano
freaking
S.
terrible product that is. They limit your
I
amount of
bought like
tokens?
5 years ago.
Yeah, there were like 5 cryptos back then, so not quite. But I guess Tevis, your opinion probably matters the most here because you are a shareholder and B, not completely biased like Tanner and I are.
Of what?
So what did you think of the Robinhood earnings, or did you see it or see anything?
I still haven't heard the call fully. I skimmed. I also checked out the report. I mentioned this to Tanner on his stream yesterday. I really liked the earnings. I mean, 45% growth. I liked the gold subscriber numbers. I like net deposits. I think they're just continuing to execute. They're really, I don't know, man. I love them, like listening to their calls and watching the reports, mostly from a product perspective, just seeing what they include in their roadmap and the speed of execution and the innovation that we see from them consistently. I think after Vlad at that France event started talking about tokenization, I see tokenization all over the place with all of these other companies now following suit. And just, it's really cool because there's the financials and you can have the numbers tell a story, but you can absolutely get the gist of I don't want to say the soul of a company, but the culture of a company from events like that, and just how much of a leader they are from, like, if they start talking about something, then all of these other companies follow suit in the next weeks and months.
So on tokenization, this is what I'd like to talk to you guys about if you guys are good with it in the after hours, because this is an audacious statement and it's worth discussing.
And you probably saw last week, Chairman Atkins of the SEC gave an interview about tokenization. He called it a great innovation. Mm-hmm. And we agree with that. We think tokenization is perhaps the biggest innovation to come into capital markets in the past decade.
Tokenization is the biggest innovation to come to capital markets in the last decade. There's been a lot. So,
I mean, when I talked to Vlad, and it's been like a couple months now, maybe, like I asked him basically about tokenization because he wrote that piece on, I think it was Bloomberg, if I'm not mistaken.
New York Times.
Yeah, the New York Times around tokenization. And like his whole vision with it is really interesting. And if it does play out the way that he expects it to, that will really have domino effects on a lot of different industries, from not only a liquidity perspective of like, what do private companies versus public companies look like in the future? And what is the utility of one over the other? But also from like a startup space perspective, this entire like VC backed, trying to get funding and all this, everything will go straight to the end user and be democratized in that sense, right? Like if I have a startup, I don't need to make a pitch deck and then go and do presentations with all these VCs for me to raise around. If I already have an existing audience or an existing base of people that are bullish on me and my startup, then it goes, like, you can have instant liquidity from that perspective. So I think it really has downstream implications across the board. It's a matter of how it's executed and how it's adopted. But it's like, it's a massive, massive chunk. Like, that is a big, big problem that they're tackling, right? It's not like, oh, well, we're introducing this new product and we think this new product is going to add, 5% or 10% to the top line of our growth. Like they're tackling a massive problem. And
What do you guys think of the actual quarter, though? Gold subscribers, retirement. Did you guys see what they posted today? I was supposed to talk about this earlier, but I completely forgot. The margin book for July.
Oh yeah.
Oh my
goodness.
God, bro. This is crazy.
And the comments around that Vlad had said, did I repost that? I guess I didn't.
Look at that. That's month over month.
Yeah. So Vlad had a great, and I love, how interactive he is on X. Okay, here it is. Let me share this real quick. Sorry. Because he retweeted it, and sometimes it's like, yeah, it's just a retweet so people see it. Proud of what the team has delivered. The growth isn't just macro, it's product. Freaking love that. And I agree. Like a lot of people are looking, and that's what I got, which was a weird takeaway from Robinhood. They're like, oh, it's falling because, it's going to have a hard comp in 2 quarters. It's like, yeah, the comps get a lot harder in 2 quarters. That's absolutely right. And like, yeah, they can't do that because of crypto and everything. Crypto is less significant this quarter. I don't think they've looked at the results at all. And ultimately, like that's downplaying what this company has already done, and also the immense of TAM that they're expanding into over the next couple of years. So, and just seeing like this sort of thing, what was it, 4 or 5 quarters ago, they actually lowered the price on their margin book, and we're like, well, it'll probably work out in a few quarters. Like it's almost instant. And obviously it was very much the right move. Not only is the book up, but they have made a killing on it. Accelerated that business. Stock lending, that was another really interesting thing that stood out in the quarter, was that hadn't been so meaningful since COVID days. And some of that is harder to borrow names, which is signaling in my ears that if we hadn't entered a pullback in the markets, probably some short squeezes might start firing off. If a lot of people are trying to borrow against harder to borrow names, that's usually a dead ringer, which is a lot of fun. But all that's just great and gravy.
Do you want to get into
really good, solid quarter, triple beat, and the quick reads on like Fastlane, or they did mention it because an analyst asked, well, and on advertising as well. Though I think on advertising, it's a little bit early for that. But from my perspective, it was the last difficult quarter. That's what I was calling it going in, just because of the intentional Braintree headwinds. But they also showed and illustrated, did a good job of showing like, hey, these headwinds go away completely by quarter 4. And they're banking in to their guidance, like e-commerce slowdown that's happening globally because of tariffs and some other stuff, which I think are probably just very soft and conservative assumptions. So they've set themselves up, I think, for pretty strong beats over the next few quarters, because almost nothing is baked in.
look at this outstanding share count, eh?
Yeah, but like, why don't they accelerate this even further, Roy? Like, they have the room to do it. Like, say F you to the market and just buy back way more.
So I agree with you. There is a little bit.
You're going to get him angry.
Well, there is a little bit of consideration here, though. So do they have the actual cash sitting there doing nothing that they can just buy back? No, they don't. Free cash flow, again, it's going to be huge over the second half of the year. That would be fine. I'd be good with that. But the problem is that they have debt, so they can't just go out. Well, I guess they could. They do have some existing lending stuff. They could dilute as well, which would be stupid to dilute to do buybacks. But they also have one of the reasons why free cash flow is a little bit more lumpy is because of the way that they're doing the PayPal working capital, which is the merchants like front running a certain percentage of the revenue, and they pay it back over whatever term that they decide on. So basically what I'm saying is they would have to either dilute, which wouldn't make sense, take on debt, which I wouldn't really love it, but it'd be kind of like the SoFi dilution. It'd be like, it's marginally good. It could be really good, but I don't really like that in particular. Or they could do something like sell stake that they have in Mercado Libre, which that's fine. I think that's a great company that they own a huge amount of it, though. They could sell that and just ramp up their buyback. So last thing on this is Robinhood. That was one of those like little tiny footnote things that were so cool. They freaking bought their own dip. They bought back 1.5 billion shares. No, that's not right. $1.5 billion worth of, no, whatever it was, the amount that they usually would allocate per quarter. They did that very aggressively.
1.5 billion a quarter, right? Because it's $6 billion a year. Buybacks.
Not buybacks. But no, I'm talking about Robinhood. The amount.
Oh, sorry.
Yeah,
100. It
that's
was
what-
150 million or something.
Yeah,
Well,
it's a much
200
smaller
million.
amount. It's a smaller company too. But they ended up buying back at the average share price of 42.
Roy,
Which-
why would
Insane.
PayPal have to borrow to buy more? Their interest expenses are only 420 million annualized. They have 6.7 billion in cash on hand with another 3.3 billion short-term investments. I mean, their interest expenses are really not high at
Yeah.
all.
No, they can to a certain point too. I'm not sure that they should, and I'm not
I'm
sure.
not saying
that
they should, but they could
down.
easily take 5 billion off the balance sheet and it wouldn't
Yeah.
impact them at all.
Although, like here, I wouldn't buy. I wouldn't mind it being, more aggressive while the share price is like. I don't see that and says, oh, it should be trading in the mid 60s. Not after
No.
that.
PayPal has gone down as they've allocated about 19 billion toward buybacks over the past 3 years. In total, over the past since 2014, they've spent close to 30 billion on buybacks. It's not doing anything for shareholder value other than allowing PayPal to expand EPS, which is not keeping the stock price up. Now, you can argue, as Tanner has, that if they didn't do the buybacks, then where would the share price be? Which is a fair point. Not talking about what they did in the past, but at this point in time, having 977 million shares outstanding and allocating 6 billion to the capital allocation program, you could do a 58%, 42% split, 58% to the dividend. You would allocate 3.5 billion and give you a 5.34% yield in addition to doing 2.5 billion in buybacks. This would be much better for investors at this point because it would be the largest dividend yield in tech. It would open it up to a lot of funds, including VYM, SCHD, JEPI, et cetera, and usher in a whole new class of shareholders that wouldn't normally buy PayPal. And as the Fed cuts rates, this could become a dividend growth company and become way more attractive. And as capital comes in off the sidelines, which are 7.4 trillion sitting in money market accounts, that would flow into PayPal also. If
And
you
you know
want to
what?
get even crazier, you could do 4 billion and 2 billion, and at 4 billion on the dividend, 6.1% yield.
They don't even need to go that much, Steve. Like, I think
They
just
don't have to, but they got to make a statement.
exactly. Well, no. I think they make a statement enough with just a minuscule dividend. Like, if they just take their
No.
total buyback pool and they put 10% or even less than that as a starter dividend, it would signal to the market that, okay, now it's entered into this other class of company.
Do you
You
know
don't want it to get lost with the Ciscos and the Salesforces that have a 2%
Nobody
or
cares,
higher.
man. Nobody cares. Like, Nvidia has what, 1 cent or something like this?
People aren't buying Nvidia for the dividend, though.
the dividend funds are?
They're not buying Nvidia for the dividend.
No, but it does allow them to pick up a growth
It
company.
does, but
becomes
the
eligible.
difference, they're picking up Nvidia to boost their freaking total return. They're not picking it up.
Yes, but they can't break.
I understand that, but people aren't going to look at PayPal as a total return the way that they would Nvidia. They have to start with at least 3% if they're going to do it.
Yeah,
Honestly, I think there's a class of stock better than a dividend stock. I think investors like dividend growth companies more than dividends.
Yeah.
It depends what the yield is. If the yield's 1 or 2%, they don't care.
I don't know.
No, you
People
know what?
consider Microsoft a dividend growth name.
I think when people look at dividend growth companies, the growth comes first. The dividend is just a cherry on top.
But people are not buying Microsoft for the dividend.
yeah.
I don't think that's
Well,
true.
I mean, a few do, but I mean, I think he's saying in match. He's not saying
Yeah,
literally.
yeah.
Like a lot of people would rather buy Verizon for the dividend because it's giving you a 5 or 6% yield with 2 decades of growth.
And so I'm not as opposed to a dividend now at this point. Like, honestly, for the company, a lot of things are working well, but for the stock, absolutely nothing is working. They even
Nothing
tried,
works.
and I think that this was calculated just to see, okay, maybe if we post, triple beat and it's actually extremely good compared to the expectations, stand on its own. We'll do a lot of a communication blitz up front with all these different partnerships and new things that we're launching. and it like the market sold off PayPal anyway, like extremely. Like it would have been one thing if the stock had been rocketing up before earnings for no reason, but that's not really what happened at all. So it's just like, I don't know,
Think about
nothing
it.
works for the stock, so might as well then
It's
whatever.
trading at 11 times free cash flow.
So, yeah.
Think about how insane that is.
Well, and like the other thing too is like that's 11 times free cash flow.
That's the type of market we're in right now.
Like the next 2 quarters are going to be absolutely ridiculous. Now you can't read too much into it, just like you can't the past 2 quarters of free cash flow, just the nature of the business for PayPal. But I don't think the market cares about it at all. Now the good news is top line revenue was a tremendous beat. They beat by over $200 million. Last quarter, they came in with 1% top line growth. Dollar neutral would have been 2 with leap year 3, whatever, still low. But that's because of that Braintree headwind. This time they came in at 5%, which they still had the Braintree headwind. They basically had neutral, almost neutral Braintree growth this quarter. That headwind goes away mostly in quarter 3, completely by quarter 4. With what they have as far as Venmo, PayPal World that kicks in January for Venmo, which is going to be an accelerator, and what else they've kicked out, assuming they get anything from advertising, like it's not crazy to think in the first or second quarter next year they have 10% or above top line revenue growth, especially the comps that they have that they're coming against. I think it's actually going to be very close. It could be 9%, but I do think the double digits is important. So it's like it's frustrating to me because it's such a huge amount in my portfolio. I'm not going to add more. I'm not. If it goes to 0, I've lost a good chunk of my investment and it stinks, but I can live with it, and it's not going to 0. But I'm just saying,
It's not gonna. Yeah,
I'm not going to put more money in because I'm not willing to lose more money on PayPal than what I've allocated. Is what I'm saying.
I mean, Roy, it is so undervalued that it's trading like a tobacco company used to trade.
Yeah.
I mean, the fact that you can get PayPal right now for less than 14 times this year's earnings and under 11 times 2027 earnings with double-digit EPS growth expected each year is absolutely crazy. If we go to Philip Morris, I mean, it doesn't make any sense.
they are going through. Phil Morris is going through a little bit of a boom right now, but yeah,
A little bit, but there's still more forward growth for PayPal's EPS than Philip Morris.
I love this comparison, by the way.
It's just, you're talking about tobacco companies, which are traditionally no growth companies. I mean, look at Altria Group. It's almost as bad as Altria Group.
Yeah.
I mean, we're talking about PayPal here. It's just, it was a phenomenal quarter, and the valuation is off. At this point, they can take the company private with 11 years of buying back shares at this point. It's sick.
If somebody asked me like where I thought PayPal might trade if we get a bear market, I don't think we're getting a bear market anytime soon. But I'm like, yeah, 40s, like $40 a share,
45, 50.
which means that they have on the next like 2.5, 3 years, depending on how much revenue slowdown there might actually be from whatever causes the bear market, that they're buying back half of their shares in 3 years.
Yeah.
Like, how does this make any sense?
It doesn't. I mean,
No, if they were dying and everything was decelerating, it's like, no, but that's not what's happening. Instead, it's been a longer turnaround than expected. It's been painful. It's been.
can we even say that it's a turnaround? There's nothing to turn around from. The revenue growth has been continuous. It's not like they had. It may not be the juicy revenue growth people want, but it's not like they've seen revenue declines.
So free cash flow was absolutely declining. It would have been actually horrendous in 2023 if Alex Chris hadn't come in and that divested from Happy Returns, which gave him a happy return. We've seen a turnaround in free cash flow. We've seen a turnaround in take rate. We've seen a turnaround in margins. We've seen a turnaround as far as integration of their tech stack. We've seen a turnaround in drive and vision for the company. We've seen a turnaround in being a focus on innovation and integration instead of whatever in the world they were doing before. And so they've had all these developer days, investor day, they probably would have had that anyway, no matter what, but they actually have a vision in place. So like there are things you can't put a dollar amount on that are most of the way turned around or already turned around. They have a lot of innovations, some that are very in the near term will actually fuel growth in quarter 3 and quarter 4. Some are like early next year. Some are like 5 years out. and they do a good job of forecasting what those might look like in the future. But this is, it's weird. Like I'm like, oh man, if I was not in PayPal now, I'd own a really big position, but I do, and I can't make myself buy more. Well, I can, but I'm not going to. It's above the level where I can add anymore, and that's frustrating because the stock price is going one direction while the company is going the other. So
You know what it feels like? It feels like AT&T.
Yeah.
Feels like
Feels like-
AT&T did.
Hmm.
And AT&T started breaking out this year. But that was dead money for a long time.
PayPal will have its moment.
Yeah.
And
The
I've been
financials are too good for it not to.
And I've been thinking of PayPal like Walmart. Walmart was written off for dead for a long time. Massive, massive employer, massive company. But people are like, well, there's all this new competition and Amazon and then stuff internationally and China and, all the supply chain stuff that they had to figure out. And what they had been doing quietly, I think it was 2017, maybe 2018, they really started focusing on this, and they really ramped it up through COVID, was focusing on that internal culture. They focused on the vision, going back to their core, on their tech stack as well. They really built out their Walmart marketplace and all of those logistics that go along with that. Their tech stack as well. So they've done a lot with that. Advertising as well. And so it was very quiet, but there was a moment in late 2023 where I was like, man, this company is actually, it's one of the largest companies out there, but it's like undervalued. I think it's probably going to go on a run. I don't know when that is, but I was like, man, they've been killing it for years. PayPal they even brought in a guy from Walmart, Srini, over on the CTO side, but PayPal has been doing the exact same thing. It's a question in my mind of not if, but when. And I have no idea when. I was thinking this quarter, probably not, although expectations were so low. Q3 might be slightly early because I think the market really does want to see a lot of top line revenue growth. And there's still some Braintree headwinds there for Q3. Q4 is, I think, where, especially with the guidance, that the market, if it doesn't get it, like it's just, I don't know, maybe it'll never get it.
I know you don't want to hear this. Apple should acquire PayPal next week.
Well, I think SoFi should acquire Apple. So,
Man,
Yeah.
the likelihood of Apple acquiring PayPal is a lot greater than SoFi acquiring Apple. But PayPal becomes a bolt-on acquisition for them.
Apple isn't acquiring anything, Steve. Let's be honest.
I think
Tim
they
Cook
are. I
needs
think
to
they're going to go
deploy
on a
cash.
buying spree.
They should buy Perplexity. They should have bought Perplexity.
Perplexity,
I think they might
PayPal,
buy Perplexity.
MSG, and Warner Brothers Discovery.
If Tim Cook gets replaced, then I'll believe you.
Tim Cook says they're going to go hunting. I think he's getting the message.
You can't spend $13 billion on CapEx when your 4 competitors in the space are all spending 70 to 110 billion.
Yeah,
a year.
10x that. Yeah.
You can't do it.
Yeah, well, it's why they are in the position they are in the
Yeah,
max.
but they don't just because the company has been historically there. Like
They haven't been historically there.
they have been for the last 2-3 years.
Sure, that's not historically.
Well, historically, they haven't made big acquisitions and they haven't allocated a lot of capital toward CapEx. But that needs to change. I mean, they have.
Historically, they were a company that actually innovated.
Right. They innovated, but they haven't for the past couple of years. And in order to do that, you have to deploy CapEx.
You know what? Let's take this to the after hours.
Sounds like a good idea. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.